Hello, and welcome to this webcast on Enhancing Skepticism to Fight Fraud. I'm Julie Bell Lindsay, the Executive Director of the Center for Audit Quality, and I'm pleased to moderate our discussion today. This event is being brought to you by the Anti-Fraud Collaboration, or the AFC, which is led by the Center for Audit Quality, along with Financial Executives International, or FEI, the Institute of Internal Auditors, IIA, and the National Association of Corporate Directors, or the NACD. Before we get started, a few housekeeping matters to run through with you here on slide 2. I'm pleased to announce that this webcast is going to qualify for 1 hour of CPE credit for the Behavioral Ethics field of study, as well as 1 NACD skill-specific credit. If you want to earn NACD credit, please indicate so by selecting yes in the on-screen survey. You must confirm your attendance throughout this webcast by clicking the participation pop-up markers. To qualify for CPE or NACD credit, you must respond to at least 75% of the participation pop-up markers. If you do not need CPE or NACD credit, you can just ignore those markers when they come up. They're going to go away if they're not clicked. Finally, note that there will be an evaluation of this webcast at the end. I can't stress enough, we would be very grateful for your feedback, so please take a moment to fill that out. So let's move on to today's program. Slide 3 sets out our 3 goals for this webcast. First, why is exercising skepticism so important? Next, we're going to turn to how organizations can use skepticism to mitigate fraud risk. And finally, we'll explore steps that can be taken to enhance your level of skepticism. We have a great panel of experts to help us do all of this. So on slide 4, I'm going to do some quick introductions. I'm going to start with Nancy Haig, who is the current chairman of the North American Board at the IIA. In this role, Nancy provides directions for the IIA's strategic plan in North America and oversees its implementation. Nancy has been an active member of the IIA since 1994, including serving on the editorial board, the audit committee, and she's currently a member of their global board. Nancy is also the principal consultant with PIAC LLC, focusing on governance, risk compliance, and control. Her 40-year career has included leadership roles in the financial and professional services, healthcare, and pharmaceutical industries. Nancy, thanks so much for being here.
Thank you, Julie. It's a pleasure to be here, and thank you, everyone, for joining us today.
Also with us is Julie Vachot, who is an audit partner at Deloitte. Julie serves as a national professional practice director, leader of global system of quality management within the audit and assurance services, as well as she is part of their fraud risk center. Julie recently assumed the global system of quality management leadership role to support Deloitte globally in the design and implementation of an enhanced system of quality management. With over 31 years in audit, Julie has extensive experience consulting with audit teams serving SEC registrants through really tough risk situations. Julie, also very glad to have you here.
Thanks for having me. Look forward to it.
And our third panelist is Brian Wilson. Brian is the Vice President Corporate Controller of My Eye Doctor, based here in the Washington, D.C. metro area. Brian is a distinguished finance executive with nearly 20 years of delivering insights and results in accounting, M&A, and process improvement. Brian holds a CPA and a CGMA credential and is an expert on many U.S. GAAP and international financial reporting standards. He's a frequent speaker on complex accounting and reporting topics and has served on committees for FEI, as well as the Michigan State University Accounting Alumni Board. Of course, Brian, I am sure that the alumni badge that you wear with the most honor is a Center for Audit Quality alumni. Brian was on our professional practice team several years ago. Brian, welcome.
Thank you, Julie. Delighted to be part of this and happy on a really important topic, so thank you.
Thank you. Before we get started, I want to highlight a few resources that you should all be aware of that have been developed by the AFC, as you can see here on slide 5. First, we released a publication called Skepticism in Practice that explores in depth many of the topics that we're going to be discussing today. The AFC also launched a webisode series called Anti-Fraud in Action, which features a series of industry leaders and subject matter experts on the most recent fraud topics. These are all very good resources that are complementary to our topic today, so I encourage you to check them out. So now we're going to get into the meat of the presentation. Let's start with defining skepticism. So let's level set for the audience today on what skepticism is and how it's applied by the different roles within the financial reporting ecosystem. Julie, I'm going to start with you from the auditor perspective. Can you share your thoughts?
Absolutely. Well, we'll start with the auditing standards, which require us to exercise professional skepticism, which means having a questioning mind, being alert to indicators of possible misstatement due to fraud or error, and performing a critical assessment of audit evidence. We need to look beyond the obvious, be present in each interaction, and critical with what is being presented. For instance, if we're auditing a financial projection, skepticism would require that we don't just collect the projection. We'd seek to understand management's process, including internal and external information utilized to build those projections and significant assumptions used. With that understanding, our skepticism would direct us to seek if the same projections are provided to banks, boards, or others internally to ensure consistency, or perform a retrospective review of prior forecasts to consider the reliability of companies' forecasting methods, evaluate external industry information, and then finally seek evidence from those outside the finance organization in the company. The evidence that we gather throughout the audit doesn't always corroborate the anticipated results of the available information, nor is it expected to.
And let me add the preparer perspective. Preparers don't have the set of standards or the regulations to follow on this topic as developed as rigorous as Julie described sort of the audit standards. However, a questioning mindset and other traits of professional skepticism are implied in a lot of the guidance and rules, regulations that we follow. In practice, I believe that many of us in a financial reporting or preparer role exercise professional skepticism by considering all the available research, guidance, practice aids, including the audit ones. And all those tools including continuing education and formal training, as well as on-the-job learning, contribute to how we hone a questioning mindset. Preparers are stewards for high-quality financial reporting and more increasingly non-financial reporting that is prepared for internal external stakeholders. Therefore, gathering information and asking questions to get to accurate, reliable, and relevant information for decision-making is a core part of the responsibility we have to all stakeholders.
Those are great points, Julie and Brian. And it's also an internal audit responsibility under our standards to perform all of our audit work utilizing skepticism, especially when it comes to fraud risk management. However, we need to be tactful in our approach when exercising skepticism. It's almost an art form. I know this is a serious topic. However, on a lighter note, I'm not sure how many of you have heard of the classic mystery show Columbo. You may want to check out just one old episode on YouTube. They're pretty much all the same. Anyway, Columbo was a disheveled, bumbling detective with a basset hound, but always polite and personable, and he would always end a conversation with a suspect as he was on the way out the door with, "Oh, by the way, just one more question," which we call the Columbo effect. It's an approach that seems to work to get the information you need to come to the right conclusion. And a quick little story, if I may, to illustrate the point further. Very early on in my career, when I was working in internal audit for a major corporate New York bank, one of our projects on the plan was to assist the external auditors in getting the information they needed. The auditor had sampled a limited number of check payments, and back then, payments were made using pre-numbered check stock, and the auditor found no issues with the payments. The next step for the auditor was to interview the head of check processing to find out how the process worked. The head of check processing explained that the checks were matched against the file when presented for payment to determine whether or not they had already been paid or stopped. The auditor was satisfied with the answer and her review was complete. However, my colleague and I looked at each other and at the same time asked a follow-up question, which was, if the checks weren't on the file at all, would they be paid? And the answer was yes, which meant that a check fraud could occur. So again, it's all about understanding the business, the processes, critical thinking, and asking those follow-up questions. At times, skepticisms may actually lead to a full-scale fraud investigation. Those of you who are fraud examiners know that fraud is most likely to be uncovered through anonymous reporting, and the next likely detection of fraud is through internal audit. However, as I am sure that most of you know, once you are at that stage, you want to have the facts when interviewing a potential suspect, and at that point, you are most likely attempting to determine the start of the fraud, you're trying to quantify the loss, and you're determining who else may have been involved.
Thanks very much for that, and I apologize. The lights went out where I'm at, so I'm a little bit in the dark here. But let's now move to who should strive to exercise skepticism. Brian, I'm going to come back to you. How do preparers and management approach skepticism?
Yeah, thanks, Julie. Great question. Managers spend a lot of time identifying issues and solving problems. So applying a questioning mindset underlies a lot of what we do, especially even when we have to act really quickly to make decisions. Today's business environment is complex and constantly changing despite all the technologies and processes we set up to streamline and simplify things. So those of us in finance and accounting roles are often asking questions in order to challenge the status quo, add operational value, and report decision useful information. Keep in mind, too, that preparers are, also on the receiving end of a lot of questions. We're routinely questioned by the C-suite and those charged with governance, and are expected to know things before they are identified or reported by other parties, such as, internal and external audit. We're often also the front lines for questions from internal and external audit. So being mindful and anticipating the types of questions they ask helps round out a professionally skeptical mindset and have informed responses and data.
That's very helpful, Brian. Thank you. Go ahead, please.
I'm sorry. I was going to add, too, that, professional skepticism, while it can be learned, honing it requires, experience and business acumen. It also requires listening to and learning from various subject matter experts, whether they're on the front line of operations or technology experts, or those who have, knowledge and skills that are highly specialized, such as, complex matters of law or regulation. From a finance reporting perspective, I'd say, while there's a certain amount of deference given to colleagues in those highly specialized areas, we have innate reliance on what they do as experts. We're nevertheless the stewards of a lot of the reporting that's done, and so we always are required to form an independent perspective and dig deeper when the data and explanations don't make sense. As I tell my colleagues, one of the things I always try and impress upon folks is that skepticism, though, can be a stumbling block if you charge too hard with it, because the word itself can be associated with doubt or just asking questions, a lot of times to fulfill merely a compliance-only activity that is perceived to have a lot of business value. So when you, can communicate and convey professional skepticism, in an artful and deliberate way, it can also lead to a lot of competitive advantages. And I think that's important for a lot of preparers to keep in the back of their mind.
That's great perspective from preparers. Julie, what does the application of skepticism look like in practice for auditors?
So after we carefully consider risk, practically speaking, skepticism looks a lot like this continuum that's reflected on the slide. Professional skepticism reflects more or less doubt within and across categories, and not necessarily a completely different mindset at each distinct stage of the continuum. So you might have a blended lens. Lower risk and susceptibility to material misstatement and areas with routine or little judgment may align with a more neutral attitude from an auditor's perspective or preparer's perspective, while those with higher risk and susceptibility to material restatement, complex judgments, or fraud indicators should lead to more doubting attitude and thus need for more or less audit evidence is considered in the continuum. In the earlier auditing of financial projection example I gave, assume the projection aligns with an immaterial balance or insignificant judgment where we clearly be in a neutral stage of the continuum, where we would potentially gather evidence at interim and seek limited targeted evidence versus a situation in which the forecast relates to a material balance or a significant judgment where we'd flow to a more presumptive doubt, seeking evidence for the measurement and period end and likely gather greater corroborating evidence and extend the testing required. Complete doubt really comes into situations where our audit evidence reveals more than an inconsequential known error or there's an asserted fraud. In those situations, depending on the facts, we might ask senior management to step in to reassess the matter or ask the audit committee to direct an independent investigation. Another example in practice, on occasion, engagement teams might bring identified frauds forward for consultation. While efforts have appropriately focused on identifying bad actors and quantifying the errors, which is a really, really tough process to go through for all, if the identified error is immaterial, all may claim victory before the control deficiency assessment is complete. This is an example of a mental shortcut we sometimes might make when trying to efficiently navigate complexity. There may be a bias that if the fraud did not result in a material error, then there isn't a material weakness. However, as is the case in many situations where other than inconsequential fraud has occurred, if there is a reasonable possible opportunity that the control deficiency could have resulted in a material error, such most likely results in a material weakness. So again, just keeping in mind while we're in those types of challenging situations, the types of considerations you want to keep front of mind. Nancy, from an internal auditor's perspective, you might have a little different lens, correct?
Yeah, so doing our routine work from an internal auditor perspective, we actually start with trust. However, during the course of our work, we may change if we see red flags. We need to have that openness and start with that rapport, because if we don't start with the right attitude, it'll be much more difficult to get the cooperation and information we need to perform our work efficiently, effectively, and to arrive at the right conclusion. Also, it helps to have operations management understand why we are auditing certain processes. As an example, we may explain the critical significance of appropriately engaging third parties related to the regulatory compliance risk of anti-bribery and corruption. If we take the time to explain the importance of what we are reviewing and why, and provide information about potential red flags, our work is much more valuable than reporting on whether or not internal control procedures were followed. We want operations to be skeptical too and understand potential risk areas that are key. Brian, what would you like to add?
Yeah, great, Nancy. Thank you. What I'd add is, I think about the, those of us in the roles that we play and the over 5,000 attendees I think we have on this webcast right now. And I'd be willing to bet that, they're all part of organizations and companies that have, published core values and codes of conduct that all employees are expected to adhere to regarding behaviors, to do the right thing. And they have management of their processes like internal controls and whistleblower hotlines and the like to empower the exercise of skepticism. The point in all that being is that if the tone at the top and the culture isn't promoting and valuing a questioning mindset through various mechanisms, then demonstrating and applying professional judgment and all that finance and accounting preparers do can be even more challenging. So tone at the top is to promote that mindset is vital at the end of the day.
Brian, that's a great point about the need for everybody in the organization to be on board with applying skepticism. Julie, I'm going to come back to you. Should members outside of the financial reporting process also exercise skepticism?
Yeah, absolutely. There's really not a lens in an organization that skepticism isn't relevant to. We often say, see something, say something. At the end of the month, are you storing anything in different offsite facilities? Are you seeing or doing anything unnatural or working unusual overtime? Are you asking customers to assume terms or enter into side agreements not reflected in underlying source documents? Know what feels right and how a business should run. When we talk to folks who have been through significant frauds before, most of them know it and felt it. So in your seat, we look to each and every one of you to exercise skepticism as it applies to your role.
And to add on to what Julie just mentioned, I find that non-financial managers are often flexing, their professional skepticism muscles, but, do so using a different vocabulary. So say, for example, you're entering a new line of business or experience a significant change in your operating environment from a merger or sale. The questions being asked by, financial and non-financial managers alike are things like, do we have the right operational procedures and safeguards in place? How are we measuring returns and assessing performance? What kind of change management and communication protocols are being developed and conveyed? These and many other questions indicate critical thinking and the exercise of good judgment, which are the hallmarks of a questioning mindset. The team in the field or the integration management office may not use terms like, exercise professional judgment, but that's what they're doing. Think of it this way, right? When the worst case scenarios hit the front page of the news cycle or begin trending on social media, are they usually the result of someone exercising too much professional skepticism? I think the answer is no. So everybody ultimately should exercise professional skepticism, and you don't have to be a credentialed, certified public accountant or, other finance professional with fancy credentials to do so. It really goes back to culture and tone. Skepticism or questioning mindset needs to be nurtured there and then permeated throughout the organization.
Well, I agree with both of you, Brian and Julie. And it's very important to create a culture where skepticism is not just utilized, but where it's valued and rewarded. There should be a true open door policy, and everyone in the organization should be encouraged to raise questions without fear of retaliation, to have an effective fraud risk management program.
Let's now turn to a topic that's been obviously top of mind for everyone over the last 9 months, and that's the impact of COVID-19. Brian, how has COVID-19 impacted your company's control environment, and are there any emerging fraud risks that you have seen?
Thank you, Julie. Yeah, the importance of exercising professional skepticism in the current environment really cannot be overstated because nearly every facet of the work that, my colleagues and I do has been impacted or disrupted by COVID-19. We've spent 3/4 of a year now where we've been evaluating, when, where, and how, our resources are doing the work. We're focusing on, conserving liquidity and responding to ever-changing and increasingly sophisticated threats to the control environment, including, areas susceptible to fraud. At my company, we thought a lot about all three elements of the fraud triangle: pressure, opportunity, rationalization. Because in the midst of such disconcerting circumstances caused by COVID-19, all three elements could lead to old or new fraud schemes. We've spent quite a bit of time reviewing our controls and enhancing training and safeguards over cash, particularly as it relates to accounts payable and treasury controls, because of the threats we've seen increase from phishing and other cyber scams, things like fictitious vendors and ACH fraud risks. We've also been examining a lot of our controls and fraud prevention measured at the point of sale, focusing on data analysis and other tools that can assist in identifying anomalies and other risk indicators. My company, while we're fairly successful transitioning quickly and relatively seamlessly to a virtual close and reporting environment, we've also been reviewing the effects recently as we come up on year end with relaxing the timing on certain, control activities or the impact of the controls because of, there was maybe less segregation of duty, due to impacts that we had to take with certain employees. So we're examining those consequences pretty closely. Lastly, I'd add that our audit committee has rightly been reviewing with management and our external auditor our accounting policies on, significant areas of judgment like allowances and reserves, given the data, the trends that we're seeing in the COVID-19 environment. So again, there's not really one aspect of our, my role, my team's role, or the finance organization that hasn't been impacted, and those are a few of the things that we're focused on.
That's great, Brian. And that brings up a very good point. And I would just like to add that the 3 lines model, formerly called the 3 lines of defense, has recently been refreshed by the IIA. And it provides a great example of how management, the first line, the risk, compliance, and other second line functions, internal audit, the third line, and external audit all should be working together to mitigate fraud risk and ensure good governance, not just during a crisis, but continuously.
What about internal threats, especially from a financial reporting perspective? Julie, coming back to you, what areas should people be paying attention to?
Sure. So Management often has more skin in the game when it comes to internal threats. Now it's a good time to pay attention to forecasting bias that may occur from a going concern perspective, to debt covenants, to areas sometimes overlooked like warranty exposure. For example, there could be a bias establishing warranty reserves or releasing a new product, and how prior warranty experience won't apply to this new product. It's also a great time, to Brian's earlier point, to pay attention to where different people are filling control owner roles. Does the person have sufficient time? Do they have the right skills? And are segregation of duties still appropriate in the organization? So those are some key considerations.
Let's now switch to how we can take skepticism to fight fraud. Brian, in the context of COVID-19 and beyond, how can skepticism be used to mitigate fraud risk, especially when these stress factors are present, such as the increased pressure and incentives?
Yeah, thanks, Julie. Certainly, I'll speak to that. As I said earlier, there's heightened risk with all three elements of the fraud triangle, especially in a COVID-19 environment. And I think the tips on the current slide we're showing are exactly on point to mitigating risk of fraud. One of the things I'd really stress for our participants today is that leveraging advanced technology and data analytics, the last point, is a great way to combat and ultimately investigate fraud. I think the more that finance and accounting professionals become tech-enabled, learn how to use data effectively, embed analytics in their processes, the stronger the exercise of skepticism and more opportunity they have to detect and prevent fraud.
That's great, Brian. And from my experience, we need to be assessing those outcomes that are incentivized, especially at the highest level of the organization, where unfortunately significant fraud risks are most prevalent. There's the risk of revenue recognition fraud linked to bonus payments. And as you just mentioned, Cressy's fraud triangle still holds true today when we consider the potential for fraud risk throughout the entire organization.
What about skepticism's role in fraud deterrence and detection? Julie, are there different approaches or considerations to keep in mind?
Yeah, Julie, absolutely. There are various different approaches or considerations when we're in the face of fraud risks. A great initial perspective is considering a company's key performance indicators or their KPIs. What KPIs does management focus on during their communication to external parties and the board? Are the company's KPIs unbelievably inconsistent when we look at competitors? KPIs with a strong tone or culture may drive the business and people's behavior to act unethically. The balance of the importance of brand and ethical behavior to KPI metric emphasis can be a challenging one for leadership in setting the tone for the organization. As compensation is set and advancements are awarded to individuals, this is something for senior leaders to consistently consider. Are they paying too much attention to KPIs in their identification of individuals for advancement? Or are they, again, balancing what's important to the organization from a tone and culture perspective? As auditors, it's important to understand our clients' culture and know their business then. In consideration of such, we should consider how we might modify planned audit procedures, the nature, timing, or extent. As an example, I've seen audit evidence where bad actors noted the auditor just rotated out of that subsidiary, so might be a good time to pull those reserves down. Or the auditors accepted our internal documents as evidence, so just make sure we get our records in line. If we are too predictable or don't ask for sufficient evidence to corroborate explanations or representations, we haven't provided optimum deterrence.
And so from an internal audit perspective, fraud risk is considered in the overall risk assessment and internal audit plan and in every single project. And of course, skepticism is important in both deterrence and detection. When it comes to fraud deterrence, the focus is on ensuring that the appropriate internal controls are in place. Going a step further, if the internal auditor finds that the controls are not in place, then the focus will turn to fraud detection.
Nancy, can you provide further examples of that?
Sure. And just to be brief, but many come to mind. However, in one case, in a professional services firm, and I've worked in 3, as part of a review of a practice area, we found that controls over T&E expenses were not in place. And in one instance, further review, because that's what you do, revealed unethical behavior on the part of leadership of that practice. And then another case, actual fraud was found. So it's kind of a continuum. You start just looking at things. If the controls aren't there, you move on further when you see red flags.
That's helpful. Thank you. I want to touch on another area related to fraud deterrence and detection. Brian, I'm going to come back to you on this. As technological advancements are outpacing or disrupting businesses in many industries, how can technology be leveraged by the financial reporting ecosystem in combating fraud? What role does skepticism play in using that technology?
Yeah, thanks, Julie. I think a lot of companies are using technology to support fraud testing, including communication tools, file sharing platforms, video conferences. All those, different things we have in our tool belt, allow fraud specialists and personnel from management to investigate, suspicious actions or, have access to required information to do deeper analysis. And I think it creates a lot of opportunities for companies to leverage their data to detect fraud before a financial loss occurs, or, compresses the timeline in which, bad actors can effectively commit fraudulent acts, or enhances, frankly, a lot of times retroactive look backs on fraud, when you kind of do your how did this happen, maybe your 5 whys type of approach. As it relates to skepticism, AI and machine learning are tools that are being used to automate a lot of elements of the financial and accounting process, including transaction processing, think about your invoice to payment cycle, accounting processes, think of that as like consolidation and just, analytical processes. The potential for AI and machine learning to combat fraud is enormous, but it also has its limitations. For example, machine learning may learn the wrong inferences or make erroneous or irrelevant fraud assessments. Additionally, when the data sets are small, machine learning can overlook obvious connections. So I think one of the key takeaways is that even the most advanced technology cannot necessarily replace, well-informed human judgment and expertise. That's important to examining, when there's sort of indicators of fraud risk.
Right, exactly. And skepticism allows us to self-reflect and identify risks that have not been considered, but have created deficiencies because of an evolving environment. Again, machine learning predictability, that's a tougher one to do in that environment. Often companies have data in different or antiquated systems due to different business processes or acquisitions. Technology can be best used in those to break down silos where data is maintained in an organization, and that can help us inform complex problems. In the future, as Brian noted, hopefully AI can further be used to assess the output of the various data sources so that we can connect the dots from a forensic perspective. For example, the ability to see a timeline between a social media post, an email, a mobile phone GPS location, an employee expense for dinner, text messages, and an ultimate PO received. Currently, human investigators are used to connect these dots from the various data silos, but in future, forensic findings may come from new technology in an AI environment. Every day, there's new technology and new threats being introduced to our environments. Thinking about those risks and the environment that we work in, always maintaining a questioning mind when we're fulfilling our roles is quite important. Unfortunately, we can't get into a lull in our roles and lose that curiosity. In those situations, what we see is mistakes that we might make allow significant frauds to occur.
Yeah, I would agree. Technology is very useful in both deterring and detecting fraud. And I think it was Brian that mentioned first dashboards and KPI. They can be used to highlight abnormalities, which can then be investigated. Analytical tools are used by internal auditors to review significant amounts of data and check for variances. And internal audit, too, is responsible for reviewing IT controls to ensure the integrity of reporting. Professional skepticism is important here as well to ensure IT security, general and application controls are working as intended to ensure the accuracy and integrity of data reporting that we're counting on in our fraud risk management program.
Let's now turn to talking about some of the challenges to exercising skepticism and applying it consistently. Julie, I'm going to come to you. What types of factors might prohibit us from being skeptical?
Sure. There's similar challenges between the audit committee, the auditor, and the company's perspective in the sense of confirmation bias, we really do want to all believe in the good of all and justify things that aren't what they might appear to be. We prefer to bring a team together that all think the same way and allow for expediency and comfort. With that strong desire to swiftly work through things and wanting quick and expedient answers without taking the time that organizations should, when whistleblowers items come to light, sometimes they're overlooked. It's unfortunately not uncommon in fraud situations that issues that were introduced earlier from a whistleblower become bigger issues later. The initial investigation into whistleblower allegation didn't bring the fraud to light because there wasn't a thorough investigation, or frankly, insufficient skepticism was applied. Earlier detection is something to focus on, and it's always been best to have that skepticism when something is introduced initially, especially in this COVID-19 environment. The longer we let something linger, the more significant the issue will become.
And one of the things I'd add is, one of the things I mentioned at the beginning, that there is a tendency to defer to the expert. I see that a lot in roles I've sat in. And again, you should rely on third-party expertise or internal expertise, but preparers still are responsible, again, because we're stewards, form an independent view on things and incorporate the view of our experts, but not necessarily have entire deference to them. Another area in practice where I see, a lot of, bias or tendencies is what Julie mentioned earlier, that mental shortcut, why it's not material. We get to that answer really fast, or can get to that answer really fast. And to be sure, right, we live in a world of materiality and cost-benefit decision-making. However, when I have a colleague or, I've had staff in the past, tell me it's not material or no one cares about the mistake that might have occurred, the faster my radar for, the bias of omission is raised, be quite honest. I want to hear from my colleagues, if it's immaterial, after they've told me, what happened, how this mistake occurred, and whether or not the materially correct answer has been identified. Then I'm more interested in hearing about it being immaterial and sort of passing on the adjustment.
Yeah, and I would just add to the comments about things coming through anonymously through a whistleblower hotline or reporting system. Best practice from my perspective, have that compliance person, internal audit person, HR, legal, a team to evaluate things when they come in from the onset. I think that's really important to get all of those folks together so that things are not dismissed out of hand. And then when we come back to the barriers to the use of skepticism and the many biases that have been named, I think if we consider just one term, and it's actually a psychological term, it's cognitive dissonance. And if we hopefully know that, we will be able to take the right steps in any situation. Basically, cognitive dissonance encompasses all biases. If something we hear or see does not align with our internal values, we need to be able to ensure that we don't make excuses for or ignore the discrepancy if we are practicing skepticism as required. So try to remember cognitive dissonance. I think it'll be helpful.
That's a great point. We've talked about challenges to skepticism. Let's move to enhancing skepticism and what that looks like. With all of this in mind, Brian, what are some steps members of the financial reporting ecosystem can take to enhance their skepticism in their role at their company?
Yeah, thanks, Julie. I think all the tips on the current slide are exactly it. Why they think they're important is they ultimately allow you to ask tough questions, right? Because we as preparers and those who are stewards of the reported information, need to get to the bottom of things, right? We're truth seekers in a sense, right? And so, all those tips and elements on the slide kind of allow you to do that. But I'll go back to something I said at the very beginning of the conversation. Especially in a preparer role, you need to do it, in an artful and tactful way, because again, skepticism, as we talk about as professionals, has a defined meaning. But when you have to consider the perspectives of outside audiences, right, it can imply doubt or confrontation when I don't think it necessarily is. So part of the way you can, exercise or enhance skepticism is just to practice effective forms and time-honored traditions of communication, right? And do so, while maintaining etiquette and an ethical position. I think that goes a long way, right? As they say, you win a lot more friends with honey than vinegar. keep that in mind, but it doesn't necessarily mean you sort of back down from asking straightforward and indirect questions.
Right. That's so important, because that's the challenge, right? It's that uncomfortable situation that we all sit in where, again, we're all looking to get along and be collaborative and team members. I think the key to asking good questions, right, is getting back to where take the time to understand the organization and its operations and how realistic a pattern is in the business ecosystem. So again, it's looking at those key performance indicators. I think we had a question in the Q&A regarding what is a KPI. And again, those key performance indicators that a company really focuses on, and they communicate to external parties. They drive the business operations to those metrics. Again, it's from a strategic perspective what a company sees as important. So if we keep an eye on competitors in similar space, you can see how those KPIs would be quite relevant. If you're an outlier with those KPIs, that would trigger a more skeptical lens to the operations. So thinking about why you may or may not be pivoting in a similar direction when looking at financial reporting results is really important in this environment. You want to look at things that would impact your results. Have touch points outside your organization is really relevant to maintaining skepticism within your own organization. So again, those relationships with peers, relationships with other competitors, relationships with suppliers, knowing what you should expect. You want to also build your expertise internally. Skepticism is built from the awareness of your peers and what's happening from an external perspective and expecting changes that might not be there. Demonstrating skepticism doesn't always need to be contentious or demeaning in interactions. I don't ask questions of my peers to be harsh or unkind. Oftentimes, I'm just interested or curious. So it's more often a tone of, help me understand. It's a matter of forming our own understanding as a secondary party that's demonstrating skepticism. It's an intellectual curiosity that's driving this behavior. Firms live and breathe skepticism.
And if I could just yes, thank you. If I could just follow on from that point. So we talk about firms living and breathing skepticism. I think it all starts with hiring people with the right skill sets. And beyond that, it's important for everyone in our organizations to understand and overcome biases and to think more critically. If skepticism is the goal, critical thinking is the means for achievement. We also need more fraud-related training, and that should be encouraged. And skepticism and critical thinking skills should always be part of the conversation. We should encourage curiosity, creative thinking, and continuous learning. As team leaders, we should be providing time for discussion and avenues for team members to bounce concerns internally and reward those who question, who probe, and who practice skepticism.
Well, speaking of tough questions, we're going to now move into the Q&A portion of the program. And we have a lot of questions in here, so I'm going to do my best to get through these. We're going to take about another 10 minutes or so to go through some of these questions, so please keep them coming. First question, it looks like it's directed to Brian. Brian, curious on your views as to how you are evaluating your IC structure given the pandemic. For instance, how are you assessing the impact of IC and working from home? How has the skepticism assessment changed or evolved?
Yeah, great question. I think one of the big things I think a lot about, even 9 months later, since my company transitioned to a remote working environment, is just that segregation of duties comment I mentioned before. We were able to transition pretty well, pretty seamlessly to a remote work environment, and maintain our close and reporting practices as is really important for the accounting team to do. But as we've evolved into that process and people have been working from home longer, and the way we do our work, the way we interact with others is a little bit different, we've been thinking differently about the performance of a lot of controls. So I mentioned before about accounts payable and treasury type controls over cash. I think a lot about privacy over data, right? Data privacy is really important to my company and many organizations. when you don't have people in the office and the level of engagement you typically have, or safeguards around, misappropriation of assets, things of that nature, making sure that that the access to data or access to assets is really important. I mean, just some basic ones too. Our corporate office, our home office is not staffed all the time, right? So we've got mail and other things coming in there. Who's monitoring things that are going on, where there could be threats to the organization. So those are just a couple of things I think, we're continuously thinking about changes in internal control environment, because, the threats are not static, right? They're constantly changing, and we have to sort of be, keeping pace or a step ahead of where those threats can come from.
Great. Thanks, Brian. Here's another question, I believe directed to all three of you, so welcome all of your thoughts. How do the parties represented here express skepticism to each other? So, for example, management to the external auditor to internal auditor, et cetera. Does anybody want to take
I'll take a shot at
Sure.
take a shot at answering that first. So I'm always of the view that there's room for professional disagreement, right? The accounting standards and things of that nature provide for a range of alternatives, right? When the judgment is well developed, informed, and things of that nature. I think Julie and Nancy would agree, though, that all three elements of the financial reporting ecosystem need to be on the same page at the end of the day, right? Not only when we're preparing results and key takeaways to our audit committee or others charged with governance. It's important we're on the same page at the end of the day. So I think, I've always been a big fan of sort of like that healthy conflict type of approach, right? Whereas Julie said, right, she's not asking questions of management to be invasive or to stick it to me or get you a gotcha moment, right? She's just trying to ask questions that are healthy, and the same with Nancy in her role. And I think to the extent that the three teams are, able to express themselves, articulate their views on things, have healthy professional disagreement, but ultimately get on the same page, that's a well-oiled machine, right? That's something that's going to produce, generally speaking, the right outcome, the right decision, the right reporting outcome, and it's going to lead to a better quality product, and in many cases, right, a higher quality audit or a better business outcome. So that's just a few thoughts from my point of view.
And I think I could just add to that, again, it gets us back to that three lines model, right? We're all in there working together for organizations, ensuring good governance. We're working together. We have trust, but we have professional disagreements. We utilize skepticism when warranted, but it's all about being professional, collaborative, and using those skills that we know work for the benefit of the organization.
Yeah, I actually embrace the diverse perspectives as well, because it helps us. We're better with diverse perspectives. If we all come in with the same lens, we're apt to overlook things that are really, really important. So I value those relationships I have where I have someone providing a different perspective. And so oftentimes those are the individuals I'll go to when I'm looking for counsel or advice in an organization or trying to understand why something is the way it is. Again, when we look at internal audit's relationship with external audit, it's really important. They're in there every day with the same organization. They have a great understanding of risk. I'm going to want to understand why they take the lens that they take to risk, why they focus on the areas they focused on. I want to gather as much information as I can and learn from them. So again, it's an opportunity to learn and understand and be better at what each of us do in our roles.
Great.
Great advice for how the different roles can interact with each other. We have two questions here, which I think are a little bit different but somewhat related. And we touched on this a little bit in the continuum slide that we had up. I think it was slide 9 or so, or 8 or 9. But the first question is, how do you remain skeptic without being suspicious? Mm-hmm. And the related question, which I think is a little different, is how do you balance healthy skepticism with going down a rabbit hole? So open it up again to the panelists, skepticism versus suspicion, and skepticism versus going down rabbit holes in places you don't necessarily need to go.
Right. And if I could start out that conversation, because I think I mentioned that from an internal audit perspective, and Brian and Julie may have the same or different viewpoints, but we start out with trust. We start out with that rapport, we start out with that relationship, because if we don't, if we come in as confrontational, we're not going to be able to do our work effectively and efficiently. And we start out always with the trust. As far as going down rabbit holes, there are, when all of us as professionals, we have years of training, education, experience, we know when we start to see red flags, and it doesn't always occur, but sometimes it does, and that's what we're there to look at if it does come up. Otherwise, we have, a scope of work that we all perform in our different roles, and, we stick to that scope unless those red flags are apparent.
Yeah, the one thing I would add is when we look at the continuum, really when the way to get yourself to step back from digging too deep or going down a rabbit hole is to think about the risk associated with the area that you're asking questions about. And that really should drive the amount of behavior, the amount of evidence or effort that you put in associated with your question or your inquiry. And that's typically how I act from a professional perspective. I think about, was there a lot of judgment in this area? Is it apt to have a really material impact on the financial statements? And in those areas, I will ask more questions. But again, if it's an area that's really routine from an accounting perspective, the balances aren't terribly material, I'm more likely not to ask a whole lot of additional questions when I ask a single question and get a response that I expect and see evidence that I expect. So again, it's just a balance of what the risk is associated with the area that you're looking at or the concern or challenge that you might have from a skepticism perspective.
That's a good point, Julie. And if I could just add, from internal audit once again, if the risk wasn't there, hopefully we're not looking at it. So, we consider risk when we put together that plan. And then once we have decided on something to look at, we're again considering what areas are the highest risk within that. So hopefully we are all on the same page, auditing the things that are the highest risk.
Yeah.
And this, I'll add that it goes back to, communication is an art form, right? And it's a talent and a lifelong endeavor that everybody should always strive for. So, so how you approach the question is really important, right? If you look at communicating, or when you're asking questions or you're doing an investigation or just doing research, again, if you come in hard charging, if you come in confrontational, if you come in, with an agenda or a motive, right, a gotcha, people are going to feel that and they're going to react a certain way. But if you approach the exercise of professional skepticism with a little bit of background and setup, clearly identify the issue or the question you're asking, use it as a training and teaching opportunity, and the more advanced prep you have, right? You put the person receiving your question on a more relaxed footing, and again, you just have a more effective dialogue. And I think too, as I said at the very beginning, preparers too are also on the receiving end of questions. And back to the conversation we had a moment ago, you should welcome questions, right? It challenges you to know that whether or not you know your subject matter at the end of the day, right? Whether or not you can provide the right answer or the most important insight that the questioner is asking you. So seeing and playing both ends of asking questions and being on the questioning end is valuable. And I think, in terms of the rabbit holes, a lot of times in my experience, that's a function of how well or how comfortable you are in the subject matter, right? Again, if you're hard charging on something and you really want to debate something, you might tend to go down that rabbit hole. If you don't really understand what you're asking and why, you tend to go down a rabbit hole. And I think that underscores a lot of what Julie said throughout this conversation. Do you know your subject? Do you understand the business? Why are you asking the question to begin with? And those things tend to sort of fall in line like dominoes. If you can kind of, set those things up, you have a much more effective dialogue at the end of the day, and your skepticism it comes across even better and less confrontational.
Thanks, Brian. I often say that you don't really know if you fully understand something unless you can explain it to someone. So I certainly, what you just mentioned resonated with me. I think we have time for one more question, depending how long it takes the panelists to answer the question. And this one's interesting because it talks about global issues in exercising skepticism. So exercising skepticism globally has cultural and language challenges where it could come off as judgmental rather than seeking to understand. What are some best practices to exercise skepticism in a multicultural or multilingual environment?
Sure.
I'll take it. Okay.
Oh, go ahead, Brian. Go ahead.
Sure. And I've had the benefit of working for organizations and corporate and as well as public accounting. So I've had some international experience. I think it goes back again, knowing your audience, right? Principles of effective communication. You have to learn and understand who your audience is. What is the context and setting? And you have to appreciate too that whether it's a domestic audience, international one. We're also in an age too where people are hypersensitive to questions, right? You see it on social media and things of that nature, right? It's just that part of the function where we're at. So I think again it goes back to international setting, domestic setting. Know your audience, know your question, know the cultural norms and expectations go around it. Right? Feel confident that you've got a tone at the top that enables you or empowers you to ask questions, and do so tactfully and artfully, right? You can't come in hard charging, but the more you can use that communication, as I said before, to sort of explain and educate and why you're asking it, you tend to diffuse any sort of tension, even in cross-border type dialogue, if you've got the right setup in place at the beginning.
Yeah, Brian, I'll typically frame it. Could you help me understand? So it's not as if I'm questioning what they've done or questioning what's been put before me. It's helping me gather and gain an understanding so that I can move forward and explain it to others and think about how it interacts or relates to other information that's been presented from a financial statement perspective. So again, I think that's really key is your approach, as you said, and how you go in when you're asking the question.
Yeah, and
very, very helpful.
I was just going to add, so great to know some of the cultural norms. And from my perspective, I've worked in 30 different countries at least, but I think the planning is more important. So to set things up appropriately, get them to know you a little bit through the communication back and forth, through the email before you are arriving on site, and so that they can see and trust you before you even get to any pertinent questions. So that's all I would add.
Well, thanks for all of those insights. It's a very interesting question, and I appreciated the best practices that you provided. We're going to now move to some key takeaways. So I'm going to ask each of the panelists to provide a key takeaway for the audience. And Brian, I'm going to start with you.
Thanks, Julie. And again, it's been a delight to be part of this panel. I really appreciate the opportunity and the conversation. I'll keep my final observation simple. It's understanding the business is key. Everything goes back to how well do you understand the business to be able to ask the right questions, to have a questioning mindset, and to flex those professional skepticism muscles. So understand the business, understand what you're talking about is vital.
Nancy?
Yeah, and if I could just add to that, I think two simple concepts: the Columbo effect, check that out, cognitive dissonance. And also, I mentioned the IA's framework regarding risk management. So if anybody needs that, fraud risk management, if anybody needs that, please feel free to contact me through LinkedIn. That'd be great. I'd be more than happy to get you what you need, and also the 3 lines model. Thank you all for listening today, and on to Julie.
Thanks, Nancy. It's been a real pleasure to be on this panel. You can tell it's a very shy panel, and we didn't enjoy ourselves in prep session. So thanks for taking the time so we can entertain ourselves as well. Really, I would ask that, similar to Brian's, that we really focus on the bigger picture, understanding the company, the industry, their peers, their key performance indicators, and what our own biases might be. So self-reflect, challenge with a critical eye. Make sure, does it make sense? Is it consistent with our broader business understanding? And then it's really important to listen during our interactions and ask even the simple unanswered questions. I'd encourage each and every one of you to remain curious.
Well, thanks very much, and we did have a lot of fun. So thank you all again for being here, Nancy, Brian, and Julie. I would like to thank all of our viewers as well today. For those of you who wish to obtain a copy of your CPE certificate, it will be ready immediately following the webcast. So simply click on the CPE button at the bottom of your screen, or you can log back in after 24 hours. You have to wait 24 hours to retrieve your certificate and click the Get CPE icon. If you have any questions regarding NACD credit, please contact the NACD directly.